Good morning. This is the audit committee meeting for the Southold Development Corporation, Local Development Corporation. What time is it? Just ignore the time. 10:04. The only item on our agenda is the audit, which was previously sent to everyone. Does anyone have any questions?
I don't have any questions. It looked good. It's pretty easy.
Yeah.
I will tell you that I sent around a new version a couple of nights ago because she changed the formatting on it in a way that I felt was a little bit misleading. The new formatting said that our monies were either restricted or not restricted by donors. We don't have any donors. Like, why are we saying that? So I think she moved to a not-for-profit template. And although we exist through not-for-profit law, I felt like it didn't really reflect what we do properly. So I did ask her to make that change. So that was the updated version that I sent around, but that was really the only change. John had a question about the money that we brought in, that it was higher than expected, but that's because we got an application fee late last year.
I just thought that came in January. I forgot it came in December. That's all.
Yeah.
Yeah, it was just at the end of the year. So,
Make it look really robust.
Yeah.
so
We lost less money last year.
yes,
We're doing good.
yes, exactly. So that was that. This is the audit committee meeting, and the whole reason is sort of to recommend to the board if we should adopt or not. So
I would like to make a motion to adopt.
I'll second.
all in favor?
Aye.
Okay. So let me see, did that take us a full minute? Oh, 6 according to my
I think I had to start late.
Does anyone have any other business for the audit committee? Okay, hearing none,
I'll move to adjourn.
thank you. Do I have a second?
Second.
Okay, great. So that's the audit committee. And now we can move into the regular meeting. Okay, the first item on the agenda is the 22 audit, and it was just adopted. The audit committee recommended that it be adopted by the full board.
Who's on the audit committee?
You
We're
are
all on it. Except for Jean, right?
Jean's not on the audit committee or not on the
Correct.
finance committee? I always mix it up. Okay. Oh,
Or just one,
just audit? Okay.
Right.
I'm glad they, I'm gonna just put a note.
That would make sense. She's a treasurer.
Yeah.
It's nothing personal.
Yeah. No.
Yeah.
We'd love to have her on it, but
Okay, so then, do we have a motion to accept the audit?
so moved.
Do I have a second?
I'll second again.
Thank you, Charles. All in favor?
Aye.
Except for Jean. Okay, so the next item on the agenda is the 22 Paris report. I sent around the annual report, the finance report, the investment report, and the procurement report. I'm sorry, I wrote this wrong. It's the annual report, I feel like one of those is titled wrong on my agenda, but I sent around the 4 sections of it, and I have them if anybody wants to see them. Did you have any questions? Oh, the audit is the one that I sent around just a snip of, because what I have to do is attach the audit until we have the final audit, which isn't done until you guys adopt it, and I send some documents to the auditors. I didn't want to monkey with it and put stuff in there that I have to take back out. So that's why I did it that way.
And you had said that in your cover memo, explaining why it wasn't there. So totally understood. And then we fixed the procurement
Yes.
issue. We
Thank
figured
you.
out why it prints blank unless you refresh. Paris is such an arcane system. So you have to refresh the page every time, regardless of whether you made a change, for it, otherwise it'll print blank. So that was what that
I
was.
refreshed as I clicked the refresh, click refresh, and it worked. So I don't know at what point I was actually supposed to hit refresh, but I did it and it made it work.
And
So
I
thank
only
you.
learned that because I did my ABO
Training,
training.
that was perfect.
And I asked the question.
Dan is here. Just bring Dan. So, does anyone have any questions on Paris?
I do not.
Nope, nope.
Yeah.
Okay. Do you want to make a motion to adopt all sections of it?
Yes, so moved.
Okay,
Second,
thank you. That's Steve. All in favor?
I
Aye.
Thank you, and I'm just trying to bring,
was like, who else is joining?
trying to bring Dan in. Very slow on the reaction.
Mhm.
Okay, but it worked.
Oh, good, Dan.
Hey, Dan,
Hi, good morning. How are you?
we're well, how are
Good
you?
morning.
Doing great. Thank you.
Steve's got a little cough. but
A little bit, not too bad.
Okay, so Dan, your timing is great. I was actually going to turn the next section over to Ron to go over some conversations that we had with the Peconic Community School. Ron, you wanna? I think you're on mute.
Yeah, I'm here. I'm sorry. I put it on mute by mistake.
Okay, am I back on?
Yeah,
you
you're
are.
good, Ron.
Okay, do you know if we have any public members or members representing the
There's nobody,
school?
nobody is on from the public, but the meetings are recorded and then posted on our website, so somebody could go back and.
Okay, thanks. So what I'm going to talk to you about is primarily informational rather than legal, because this is a public meetings. If there are any legal questions at your option, we can defer them to an executive session. So I'll try to stay talk about the project and the issues that have been raised, but not get into the legality of things. I think we have the same objectives as the folks we've been talking to at the school and at the placement agent, which is to get a sound, affordable financing for the school, and that best serves the schools and the local development corp's interests. The financing amount is $3 million, which is on the small side to make a tax exempt financing affordable. And so there's been an effort to cut costs. It's right on the edge of whether the tax exempt structure adds costs that make it less affordable when compared to a straight taxable financing. So in order to get there, we've capped our fee at a below where it would normally be. But I've had discussions with Elizabeth Jick at Zions, who's the placement agent, and they've asked if we could eliminate the need for a trustee in this transaction, because it is a private placement, and sometimes that is done, and thereby eliminate the trustee fees. I advocated for retaining a trustee, but ultimately, I said, I can't make this decision unilaterally without discussing the pros and cons with the board. And ultimately, it's, it can be legally done, but it's going to be a collective board decision in consultation with me, I guess, as to whether it should be done. For those of you who don't know what a trustee's role in the transaction is, and if you want me to skip over things, just let me know. I've got a diverse group of people here, and our expertise is in maybe in different areas. But what a trustee does in a transaction like this is it gets put in place by an indenture with the LDC. So you have direct privity with the trustee. The trustee maintains the financial records, the amounts paid on the bonds, the outstanding balances, the current interest rate, and that information is available to the LDC. It typically maintains funds and accounts, but in this transaction, most of the bond proceeds will be applied to pay the purchase price of the property. So there's not really going to be any much money to keep in any funds and accounts. So there's not much added value there other than having the information available to the LDC to do your Paris reports and your audits. So it's a useful function there. These will be registered bonds. The trustee would usually act as registrar, and if the bond is transferred, the trustee takes care of that by maintaining records of who the current bondholder is. And now we're getting to the more important stuff that's relevant to this discussion. It holds the collateral. In this case, it would be a mortgage and a security agreement. So if the bond is transferred, say, from Republic to somebody else, the security is already in place and nothing more has to be done. And lastly, the trustee is a fiduciary for the LDC and the bondholders. And that's a very, very high standard. Now let's talk about the bond and why all these things might be important. It's a 27-year maturity that will be privately placed with Republic Bank at a closing. But the way the bond is structured is that Republic, I'm sorry?
You're okay.
Okay, just jump in if you have any questions, if I'm losing you or boring you too much. The Republic is committing to hold the bond for 7 years, after which it has a right to put the bond back to the school. And what that put entails is the school has to buy it back if Republic exercises its put. The way this would typically be handled is the bond would be remarket. We would placement agent would look for another purchaser who would purchase it at par. If there are no purchasers, then the school may have to go outside of the bond documents and look for a third-party purchaser. And, that, creates could create a lot of disruption. But that is the structure that's been proposed. The interest rate will reset at the end of year 7 based on a formula, and it could reset periodically during the course of the 27-year term. The formulaic reset is there to avoid reissuance questions for tax purposes. Frequently, if the market has changed and there is a new buyer of the bond, or Republic wants to renegotiate the rate in order to not exercise its tender right, there could be a renegotiated interest rate. This could trigger a technical tax reissuance. These are easy to deal with, especially if the bond stays in Republic's hands. It would be treated as a current refunding. It's not a costly thing to address.
Ron, if any of this happened, would having a trustee or not having a trustee impact that, or it would happen the same way regardless?
Well, I think if Republic keeps the bond, the trustee's role is not that important. The significance comes in as if Republic does exercise its tender option. Republic is, without a trustee, Republic would be the holder of the mortgage and the holder of the security interests. If a third-party bank is purchasing the bonds, all of that collateral will have to be transferred to the third-party purchaser. And if, depending on the relationship between Republic and the school at the time, especially since the Republic is not agreeing to continue to be the bondholder, their cooperation is essential. And a lot of work will need to be done to have the old bondholder and the new bondholder agree on appropriate terms, procedures for doing the transfer of the security documents.
Ron, could we make there, I'm sorry, just a quick question. Could we make Republic's put right contingent on them establishing a trustee to do it? So that we could kick this down to 5 years?
Well, what we're trying to do is create documentation that works smoothly and minimizes the likelihood of something going wrong or there having to be a lot of legal work done at the tender time. Remember, this is being driven by a cost issue. And
Right, that's what I'm trying to pick up on. If we had a trustee, if they wanted to give up the mortgage, they would have to set up the trustee and transfer before they did that. Right, so I'm not trying to make it more complicated. I'm just trying to figure out a way. You're talking about a contingency that may happen.
Well, I've talked with Elizabeth about two possibilities.
Okay, maybe we
one is having the trustee, so we don't have to worry about the collateral at all.
How much does the trustee cost?
My understanding is not very much. Trustee fees are competitively bid. This transaction doesn't have a lot of trustee work to do since there's one bondholder and there's no proceeds to administer. So I can't, my guess it would be under $10,000 a year, but I think, yeah, if their financial advisor can give you better advice on that, then it's trustee fees are relatively small.
I think John has a question.
Just quickly, Ron, if trustees' fees on this transaction should never run over $3,000 a year. That's a good ballpark. Because
John, you're very hard to hear. Will you say that again?
I said 1,500 to 3,000 is probably a trustee's fee that would be bid on this. They just don't, trustees don't make any money anymore.
So
It'd
may
be very
I ask,
small now.
is this the school worried about the, let's say $3,000, or is this?
This is
Someone
coming to me from Elizabeth at Zions, this request. They are advocating for no trustee. And my view is that they're looking at this as a 7-year bond that will be refinanced on the tender date, probably renegotiated with Republic, but the way the term sheet is written and the bond will be written, that's no certainty. And we've seen transactions go both ways, where it stays with the initial bank holder for the entire term, and others where because of relationship issues, it goes to a new holder. And the way to minimize disruption and legal work and negotiations and a formal closing, I feel strongly that the way to go is with an indenture, because everything that was in place stays in place. The mortgage and security documents don't have to move around.
You guys, for $3,000, do we all agree with that? I don't think we need to keep talking about this. Yeah.
Well,
But in all due respect, right?
well,
I
sorry.
sent an
Sorry,
email
keep
this
going.
morning, so I just want to make sure everyone is aware that they have been stopping this other places. So it just,
Right.
I just want to sort of put it out there that they are exploring other people doing this if this issue is a sticking point.
Well,
Make a decision.
here's my current concern. And
You know what I mean? It's close.
okay, here's my concern. I'm not sure who is being financial advisor to the school. It wouldn't be Zions, because they're a placement agent, and they typically would not take on the fiduciary rule of FA. There's certainly it could be a perception of a conflict. So being kind of being a small school, not having been in the financial world, I'm concerned that they may not understand that the small cost saving or a small fee paid upfront to a trustee can significantly reduce the agita that we would be having to deal with 7 years from now, trying to remarket the bonds to a different bank if Republic doesn't stay on board. And that's my concern. And I think I'm not sure if the school appreciates it. I was hoping that reps of this school and Zions would be on this call to discuss their perspectives. But our approach is we like to treat this as a 27-year bond and prepare documents that make it work. We can't eliminate all risks, but we can mitigate them through the various interest rate change periods and tender periods by having a trustee hold the collateral and, being the a registrar and of a new bond. And so to me, it seems that there's a risk here, and it could, kind of create a financial difficulty for the school 7 years down the road if a tender does get exercised and they have to scramble to basically restructure the deal with a new lender. That's my concern. And it may be a concern for the town, because I think our goal is to have financial stability, and there's some risk there.
Right, so does anyone not want to go with the trustee? Even though they may walk? Is that really the question? I'm just trying, what's the question?
I think that's the question. If a kind of a well-structured indenture is sufficient to send them someplace else, our goal is not to get another deal for the LDC, although it would be nice. Our goal is to do a financing in the best professional way we know how. And we've had a lot of experience with these, and I have always persuaded the private placement folks that the indenture trustee is the way to go. But here it seems like a knife edge of cost benefit analysis is driving them in what I think is the less prudent direction.
So what would be the next step? Would we be going back to the school? Oh, sorry, John.
No, go ahead, Francis. I'm sorry. Go ahead.
Would we be going back to the school and recommending that they move forward with a trustee? I mean,
well, typically a conduit financing agency like yourself agrees to the bond terms negotiated between the bank and the school, or whoever is the entity looking for financing, and we're happy to do that, but we are not so happy with documents that don't fully address all the contingencies that can happen during the course of the bond. And we always approach this as a 27-year bond, not as a 7-year bond, but the way it is structured.
I think we understand that. I'm sorry. We're trying to move forward from that.
right.
Okay.
Yeah, no, so we do understand that. So I guess the question is, are we saying no, or are we saying that we agree, assuming that there's a willingness to bring a trustee into the transaction?
John, did you want to say something?
Well, let me propose there is one thing I did discuss with Elizabeth is we could have a mortgage made at with a no trustee option. There's a possibility of having the mortgage and security agreements in favor of Republic, but have them endorsed over to a let's call it an unnamed third party at the original closing and held in escrow such that all the, we basically have a way to move the collateral from Republic to someone else. My sense is that would eat up more time preparing than just having a trustee.
So it'll cost them more in the long run.
I think so. I think so. That's a judgment call.
Okay.
But it's an option, but I think I still have the question of sort of what's the next step with the school? Are we going back to them?
So that's what we discussed, is that we would sort of poll the board members, get everybody's feel, and go back to them and tell them what the consensus and the comfort level was.
Well, I mean, I think at the end of the day, with or without a trustee, it doesn't solve the problem of what happens if it gets put back to them in 7 years. It facilitates perhaps, having a trustee facilitates it, but at the end of the day, it doesn't actually solve it. So in and of itself, having said that, however, I believe we're better off with a trustee than not. So I certainly support going back to the school and explaining why it's important, and that we strongly recommend that they move forward with that there is another option that we believe will ultimately end up costing them more. John, did you?
Just so I'm clear though, because now I'm a little confused, because I thought our, moving forward was contingent upon having a trustee. At least that's the way I would view it. Like, I'm not interested in the other options. I think that if they don't agree to have a trustee, I don't think it's prudent to move forward. I mean, that would be my opinion. I'm just one
And
person,
I'm
but
a slight.
I agree with that. Let's see what John's thinking. John, you're up.
Well, first of all, I think I put a number on this, which I think is probably accurate, but they should bid it out, find out, to make sure that it isn't more expensive than I expect it to be. I think it will not be. I don't want us to be perceived as being difficult to work with. Obviously, I think that will hamper our efforts in the future. So I want that to be put on the table, that there are other issuers who do use this structure being proposed by. However, I agree that what we have here in my mind, and I think in Ron's mind too, this dilemma is not our dilemma. It's just not. It is a dilemma of the school, and the school doesn't seem to get it. At least you haven't heard anything from anybody at the school, Ron, that says the school is alert and aware, because it is not our dilemma. We really don't care. The school does. The school should, and the school's lawyers should, and they should be the ones arguing for the appropriate means of protecting not our interests, but the school's interests. And so I think we're in this awkward position of advocating the school's interest, which is fine. I don't have a problem with doing that, but it's not our job. I think at the end of the day, a trustee for everybody is more prudent, not just for us, but for them would be a more prudent way of structuring the transaction. I think trying to negotiate an escrow agreement between a third party and the other members, again, none of whom seem to know what it is their interests are, would be a ridiculous exercise in legal futility and probably cost them $10,000 and they wouldn't even get it.
Yeah.
So my only issue here is other issuers do this, and I don't want to be perceived as being difficult, but at the end of the day, in the particulars of the situation, it seems to me a trustee is the more prudent way to go, but it's not for us, it's for the school. At the end of the day, this is for the school.
So I just want to make sure I understand this, whether there's a trustee or not, doesn't have that much of an impact on us. It really is to help the school. And so
Yeah, other than, I mean, if we go without a trustee, we could negotiate things with Republic to make sure there's an information flow, we have access to stuff and things like that. That's the easy part, I think. The hard part is the one that Ron's addressing, which is what happens at the end of 7 years. And, I gotta say, if you talk about Republic having separate interests, let's all acknowledge the fact that Republic is not the most stable bank currently in the universe. And they may or may not, 7 years from now, look at themselves and say, what were we thinking? We gotta get rid of this junk that we have in our portfolio because it's obviously worth less than it should be. And now what do we do? So I think it is more likely, being Republic, that we do have a situation at 7 years. However, the situation is not a situation which we're at risk. I mean, the school is at risk. We're not at risk. Nothing happens in 7 years that says SLDC is in trouble. Look what you've done. 7 years from now, the school could very easily be faced with a situation where I got another borrower, but he won't take it. I got another lender, he won't take it without the mortgage. And Republic is saying, well, wait, whoa, we got it. You want it. And negotiate some ridiculous fee or some way of, anyway. So the risk is the school's not ours. We're protecting the school. That's fine with me that we do that in the particulars, but let's acknowledge what we're doing. And at the end of the day, the Republic people know the market. They do. They know the market better than we do.
Yeah, John, I would actually almost even add to that. I think with what's going on in the banking world, this loan might get sold in 6 months from now. So I would feel much better if there was a trustee with all of the collateral. God forbid the FDIC needs to walk in, or this could transfer at 5 years or tomorrow.
Yeah.
So if it's normal course, to your earlier point, to have a trustee involved, I think we should have a trustee involved.
And I think
That's what my feeling is.
I'm getting to that conclusion too, but I'm just
Okay.
remarking that
Yep.
it's not going to help us going forward.
Right. We shouldn't walk
We
in.
insist on putting our fingers on the scale in favor of the school. That's what we're doing.
Yep.
That's all I
So,
had to say.
Jean, did you have
Yep.
anything that you wanted to add?
I think the value of the trustee acting in a fiduciary capacity will serve everybody well. I agree with John that this is an issue that the people who are directly involved need to understand and afford themselves of protections and all the benefits that come with those protections.
Okay, so it sounds like everybody's on the same page, and in as much, what's the next step? Just to get your question a few minutes ago. Ron, do you go to their council and tell them that this is our position? Would you like me to go to the school and tell them that our position? How would you like this?
I could do it either way. I think our duty is to talk to the school and explain our views and why we have them. And I really would like to talk to the school with their financial advisor if they have one.
And their lawyer. And their
yeah.
lawyer. The lawyer needs to understand that this is
Yeah.
protecting their interests.
So
Ron, would you like me to set up a meeting with you, any of the board members that are interested, as long as it doesn't make a quorum, and representatives from the school, their council, and Zion, I think?
I think I'm absolutely happy to have Zion. They're going to express a counter view, I suspect, but that's okay. They should. The school should hear whatever everybody has to say. But ultimately, I think it is the board's decision, and I think you have good reasons.
I mean, I think the board's position is clear that a trustee is something we want to have. So yes, Lisa, you should try and set that meeting up if you can.
Okay, yep,
Yeah.
I will, I'll send around an email. I'll include everybody. Don't feel like you have to participate, but if you're interested, and we'll get something moving.
And Lisa, this
Yeah.
board meeting and this discussion will be posted on your website, I assume, and
Yeah.
that this would be available. It might be helpful in advance for the
I can add, yeah,
we ask them to listen to the discussion.
I can
And
certainly encourage them. Steve, did you have something you wanted to add?
It would be nice to get a business update on where the school is. Rates have changed a lot. Is it still an economic project for them? I mean, I know that we're putting a lot of work into hopefully doing blocking and tackling here, but
Yeah.
I would like to get an update on what's going on with the school and how the
Okay.
fundraising is and stuff. I mean, rates have probably gone up 4%, 5%,
Since our last meeting.
and I thought they were pretty tight. Their budget was tight before.
Yeah.
So I'm wishing the block, obviously, but
And I don't know if this is still correct, but you know, the last I heard, I think the church was moving slowly on entering into a contract with them to purchase.
Yeah, that's why we delayed, because the church hadn't agreed to a purchase price yet.
Yeah,
And we're, you know, a little bit, everything is, I mean, the school's interest of getting into the new place by September seems to be driving an awful lot of processes that shouldn't be driven just yet, but there we are. Let's let them work their stuff out. But yeah, I don't,
it's a good update of where they
I
are.
think trustee is the way to go. I think we just leave it at that. Schedule the meeting and direct them to the website, to our discussion.
so
Good idea.
I just want to ask one more question. On this distribution list that I have All American Investment Group listed as a consultant, but it doesn't indicate who they're consultant to. I don't know if they're a consultant to the owner, to the bank.
Who are they? I never heard.
That's precisely why, yeah, you look at the distribution list, you don't see anyone identified as financial advisor to the school.
Yeah. But so I should limit this to Zion, the school, the school's council, co-councils, and us.
And an FA if they have one.
I have no, I'll ask them if they have them, but I have no indication that they do.
Yeah, well, that's a huge factor because entering into a bond structure like this has risks that they should get the advice of an FA on. We can tell them what we perceive as the advice, but we're not their lawyers, we're not their advisors.
And
Okay.
neither do we, by the way. So we have to be a little careful.
So Ron, thank you so much. I think I know my next steps. If I have questions, I'll certainly reach out. And if everybody's good, I'm gonna keep us moving because I know we have an 11 o'clock hard stop for a couple of people.
Okay?
Okay, and I apologize if I presented this to a less sophisticated group than I see there. I hear the discussion and you guys got it all.
Thank you, Ron.
I think you-
Appreciate the refresher.
Yeah, it was good. Okay, so the next items on the agenda are banking. I just wanted to alert everyone that I opened another CD. It's a 3.75%, 11-month CD. $50,000 was moved into it, although I know the rates have changed again.
Okay, that's still a good number.
That was the moment in time.
Yeah.
It's the way it has to be.
Yes, and we had 2 deposits, our annual administrative fee, which we have subsequently changed for any project that closes going into the future, but they're still grandfathered into the old system. So you know, over $5,000 for one project and almost $5,500 for one project and over $6,000 for the other project. So, and that is clearly outlined in what Jean, thank you very much, put
That's
together
helpful,
for everybody. So Jean's gonna keep doing that month to month. And we'll see how it works, whether I send them out to you periodically or if we send them out kind of in a clump before the meeting. Jean, you and I can come up with a system. Did you have anything that you wanted to add?
Nothing, I think we covered it. It just basically gives us the running balances. Little check marks on the side indicate that I've already proved out and reconciled the checkbook to it. So not only are you seeing what's on the bank statement, but that matches what our records have.
Great. Thank you again.
Okay, so the next item is the approval of payment for Jones Little CPAs for our 2022 audit. The dollar amount was $1,750. And we did talk to them about doing an investment audit, which they told me would be $525. I got something like a day ago that, in my opinion, does not meet the requirement for what the ABO is going to accept as an investment audit. So I went back to them and said, you got to get me an update like right away, because this isn't what we need. And I have not heard back from them. So, and I can't have you, I can't add it to Paris without you seeing it and adopting it. So I feel like we're kind of caught on this issue. But I defer to you on how you want me to handle it. John, sorry.
At the end of the day, we don't have an investment audit, but we have an audit. Let's get Paris filed.
Okay,
And
beautiful.
because the investment audit, look, we're not running around investing in speculative stocks. And if someone wants to call us out on this, we'll get an investment audit at a later time. And I don't think anybody's going to notice, much less object.
And I can tell you that in Brookhaven, we had been doing an investment audit for years and years and years, and the ABO just recently said, that's not what we wanted, which sent every IDA and LDC and flipped everything over, because we had all been doing basically the same thing. And they said across the board, they've told us first, but so everything is a little bit
Up in the air.
up in the air. So,
Yeah.
all right, so then
We
if
should proceed with the.
so I would just ask that you approve payment for Jones Little for the amount. Maybe we should go a little bit over this just in case that they had any other additional, I don't know, printing or something that I'm not accounting for. But they told us it would be $1,750. So maybe a motion
So moved.
up to 2,000.
Oh,
Well, I
okay.
don't know. Do
Well,
we?
so is the 2,000 intended to cover investment audit? Or
No,
That's a,
No,
okay,
I don't
Yeah,
think
yeah.
we did not get an investment audit.
that's acceptable to
Yes.
us, so we shouldn't pay her. Good.
Right.
Okay, just wanted to clarify that point.
They
Um,
never have had anything, but we have our new auditor, and this is our first full year really working with her, and there's been a couple of things that were a little bit out of sorts, but you can tell me, pay up to 1,750, and if there's additional, we'll go deal
I'm
with it.
comfortable moving for the 2,000. I
Yeah,
think
as
it's
well.
reasonable to expect that there could be some inflation.
Yeah. Odd second.
Okay, thank you.
Yeah.
All in favor?
Aye.
Aye.
Thank you. I sent around the ethics certification. If you have not yet got that to me, please fill it out and send it to me. The minutes were sent around in advance of the meeting. Did anyone have any questions, comments, edits?
I did not.
Look good.
Okay, do we have a motion?
Make a motion.
A
Thank you.
second.
All in favor?
Aye.
Does anyone have anything else? Okay, our next meeting and I don't know that we necessarily have to schedule it right now, is our, hold on, unless there's something else with the school, then we're going to have another meeting, before then, but fall, we're gonna have a meeting to do our budget and, our finance committee, so we can obviously regroup unless somebody wants to schedule that right now, but we usually meet sometime in September.
We're gonna
That's fine. If we
need a meeting.
date,
We're gonna need a meeting for the school. so-
doesn't necessarily have to be as a.
Right. Email.
I will ask the school, in addition to trying to put together a meeting, I'm gonna ask them for a brief write-up update. And I will certainly share that with everybody as soon as I get it. John, were you saying something?
No, we'll have to have a meeting with respect to the school, so. We don't need to
Yes.
set up a fall meeting yet. We'll have a meeting between now and the fall.
Yes,
Okay.
yes, I think so, definitely.
Yeah, and I think that's what Lisa meant.
Yeah.
Other than respect to the school.
In assuming that everything proceeds, that we move forward with it, we're going to hold a public hearing that you may or may not want to attend, and then we will have to have at least one more meeting of the whole group together to do their to pass the final resolution. So we will hopefully be meeting again before that, but I will send out an update to everybody as soon as I get information. And I will invite everyone to a meeting with them to make sure that we're all on the same page.
Perfect, thank you.
Okay,
Thank
all right,
you.
and we made it for the hard stop at 11, so as long as there's
Much
nothing
appreciated.
else. Feel like an
Good
auction.
job as usual. Thanks, everybody.
I enjoyed my visit.
Close the meeting.
Make a motion.
Thank you.
Adjourn? Move to adjourn.
Thank you. All in favor?
Okay.
Aye.
Thank you.
Aye.
Everybody have a great day.
Thanks, Lisa. Thanks,
Bye.
Ellie.
Take
See you
care.
all.
Okay,
Bye-bye.
bye-bye.
Would it kill the recording?
Yeah.